Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by MarketFi. I'm your co-host, Joel Elconin, along with Brianna Valesky, and I have Jeff Yady on the line. He is founder and lead trader of Trader Minute. Jeff, how you doing on this Friday the 13th?
Doing well, Joel. Doing well. So how are you guys?
We're good. We're good. Looking forward to the weekend. So you're a former hedge fund manager, and you decided to start Trader Minute. What caused you to do that? What inspired the move?
I managed funds for about 4 years, and we had a lot of success. But I'm a trader at heart, not an investor, and so it was something I looked at. I didn't want to do the rest of my life, and so I went just back to trading, and was just trading on my own. And some of our former investors flew out and said, "Hey, Jeff, we want to see what you're doing, what's going on." And so I started publishing some of the trades that I was doing and things like that, and it kind of turned into this teaching tool and this using some of these live trades, and evolved into this concept that we call Trader Minute, where essentially we teach how to trade options and how to understand ins and outs of the market while we're trading real money and getting out there and making real money in the market.
So you use the options market as opposed to the equities, or do you do both?
We do, yeah. I mean, we talk about the equities, we'll talk about other things, but our trades are really just simple long calls and long puts in terms of taking advantage of the opportunities that are out there.
Yeah, well, I mean, one good thing about that is you know what you're risking, right? You buy an option for $800, right? And that's the most you can lose, your exposure, as opposed to writing options, a little bit different story. So what's your style? Are you one of these guys that keeps an eye on the weeklies and then just pounces on them, or do you try and give yourself a little bit more time?
We like to give ourselves a little bit more time. On average, trade 4 to 6 days. And generally, we'll buy an option that's 20 to 40 days out to give ourselves some decent time. And generally, for what we're looking to do, they offer some of the better risk-reward scenarios when we give ourselves that kind of time overall. And so that's essentially what we're looking at. The last thing we want to do, and when one of our that he showed me his trades that he'd been doing on his own, and basically blew his whole account. And we notice with a lot of option traders, they have a tendency to do that. And so we try to take a small chunk and grow it large and show that risk management philosophy of being able to still capture gains without really taking those heavy losses, so that people could stay in the game and participate in some of the good times that are out there.
Do you like spreads at all? Do you do the spread route, and try and capture, the price in between, or just not enough bang for the buck for you?
Well, in the challenge that we do, where we're going to take 3,000 to 100,000 over 4 months, we don't do spreads because there's not enough bang for the buck. But on our site and on the live video streaming and during the day, we'll get into some spreads, show why it's appropriate for a spread. Right now we're in a call spread on Delta because a couple of weeks ago we wanted to be buyers at Delta, but just the long calls didn't make much sense because there's a time and a place for those spreads. So we will show those types of things as our customers request.
So did you go the spread route in the Delta?
We did. We just did a call spread. We did a June 45.50 call spread, and
that's a lot. Yeah, that's a big spread there that you're going for. What kind of premium did you get it for?
Yeah, we let me pull it up here. We got the Delta here. We paid $396 for the June 45 call, and we sold the June 50 for $216.
Huh.
And so we're with Delta price is about where it is where we got in. We're up on the spread overall, and if we had just gone with the straight call option, we'd be down a little bit. Time decay, well, not really much time decay, but some of the implied volatility effects would be hurting us because of the consolidation. And so, we wanted to keep a foot in the airlines, but at that moment, it's just a long call because of the pricing of the options didn't make much sense.
Yeah, the time decay is something you got to keep an eye on as well. Well, let's move to the big dog, Apple. Get your bang for your buck, train the weeklies or whatever. Give us your take on Apple. Let us know if you have anything going or where you're looking for potential entries.
Yeah, we bought some Apple on Wednesday. Wednesday mid-morning, the stock went down below 123. And, we're not huge in terms of technical analysis and, using all the different gadgets out there, but we're big fans of Bollinger Bands. And, Apple sold off a little overextended short term, went into that kind of lower Bollinger Band with stocks like Netflix and Amazon, all kind of doing the same thing. So we went and picked up some Apple there. Got a nice move on it yesterday. Still in that, looking for it to go up into the 126 area on this bounce. But it's kind of a classic challenge trade that we will do where, we're looking for something that has some sort of strong trend, goes counter trend for a little bit and gives us an opportunity to get in and play that next move, whether it be large or small there.
You mentioned challenge trade there, and I see your challenge. Could you explain that to our listeners?
Sure. The challenge is the vehicle is to, we talk about.
Let me check. Jeff, you still there? Can you hear us?
Can you hear me now?
Yep, we can hear you. Keep going.
All right. So the challenge is an education vehicle that we use to teach, staying in that game, but we use it in terms of the live trading. So we have a charity account that we trade out of. All proceeds will go to them, when the challenge gains are there. And so we have a limited amount of money. So we're not just, we're jumping into Apple. No, we're jumping into Apple. This is how many contracts we're buying. This is the price we got filled at. And we show that on video. We show it on live video. We show it, we email, we tweet it, and text it. Some of our customers choose to follow along. Others are looking at the learning principles and trading it as they feel comfortable. But it's really to just show those setups and maybe more so than anything else, the process of trade management. It's one thing to go out and get into a trade and pick a trade, but then, the next day it's, yesterday morning Apple was down a little bit. It's, what to do? And there's a lot of anxiety and emotion that traders feel during that trade management process. And so we take it all the way through that process. When we pop out, we show that, and then we kind of use those as those teaching vehicles there.
Okay. All right, let's move on. You mentioned GM is something that you've been trading here. It's popped up. I haven't looked at it recently. Cleared that resistance here at the $38 level here. Is it a clean breakout here on the way to 40? Give us your thoughts on GM.
Yeah, what they do, they announced another recall this morning.
I didn't see that. Okay.
We've been messing with GM for a long time, and it seems like every time it's another recall. But a lot of times they actually end up turning around, going higher on these recalls. But yes, it was a pretty clean breakout on Wednesday. And it held up. Tuesday, the market got ripped. The market was down 30 some odd points on the S&P. And GM on Wednesday started trading higher than where it was on Monday. So even though the market got ripped, GM was still up over those couple days. And so with that happening, with it breaking above some resistance action there in the 37 and a half region, we took advantage of that and jumped in to ride that kind of next little wave that it has here.
Okay, let's move on to some issues that are moving here now. This one I'm sure doesn't have any options in it, but it's certainly been in the news a lot. I guess if you trade the price, FXCM, do you have been following the saga on that issue at all?
Yeah, well, you're right. It's not something we could really trade, but it's something that I've been following. You know, as a as back when I was in, fund managing and through some of the choppiness of 2010, 2011, I almost felt bad for FXCM when Switzerland came out and unpegged the franc, and you saw them drop like that. I look at FXCM. I see the pop in it here this morning. I would be more inclined to sell that than to buy it overall, but it's one that if I'm going to get in, how can I manage my risk? And so I would probably be looking for it to find some sort of plateau here today. Maybe I could short it off of that plateau, but that's the way I would be looking at it. But it would have to plateau here in the first hour or two today and give me a really clear level with some really good volume.
Okay, let's just go rapid fire here on a few ETFs. Or let's UWTI. I know it's a popular day trading vehicle, long crude. I think it's a triple X here. Any thoughts on the crude market?
Yeah, I mean, path of least resistance is lower right here. When we still have supplies coming on board pretty aggressively, it's hard to get too aggressive on the long side of crude. OPEC, what do they do? They produce about a third of the world's production, and we have Kuwait basically coming out saying in their June meeting they're going to keep production relatively stable. So, we're not expecting any big production cuts. And so we're still seeing a lot of oil coming onto the market. We're not seeing oil companies go bankrupt or get beat up in a major way because some of those drilling costs coming down significantly. But until we see some economic pickup in Europe and some downturn in the U.S. dollar, I don't think we're going to see oil make a instrumental bounce or a significant bounce that puts it back into the 60-70 area until we start to see those things. And so path of least resistance just continues to be lower. And then when you're dealing with oil, you always have that risk of those those $3 bounces here and there as some of the shorts get squeezed out on a day-to-day basis.
Yeah, don't fight the trend. Good advice. Herbalife saga here. The company reports Bill Ackman's being investigation has not been confirmed. Stock pops and the pre-market comes right back down. I bet you get your bang for the buck in some of these options. Give us your takes on Herbalife.
Yeah, we talk about Herbalife on the trade sheet from time to time, and one of the things I say is, with most stocks like Intel, Microsoft, Apple, you can look at earnings and valuations and margins, and you can look at all different types of metrics. You can chart the thing out. You can get a decent risk-reward scenario. If you're playing with Herbalife, you're basically playing a billionaire squabble, where you got billionaires, Ackman and Icahn, fighting out over not necessarily making money, but over some pride here. And it's one that I don't like stepping in because it's not moving on any of the traditional things that I would expect a stock to move on. And so I know if I'm shorting it, which is I would rather play Herbalife lower than higher just because, to me, valuations don't make sense. Growth on it doesn't make sense. Their numbers, their metrics don't make any sense to me in terms of why this stock should be at 60 or 50. So I'd rather play it lower, but I've been very hesitant just because I know at any time, Icahn can get on the phone and tweet something out or Herbalife, like today, will come out and kind of attack Ackman there. And so I feel like I'm just getting in a battle between bullies. And so I kind of take my money and go elsewhere. But, gun to my head, had to play it. I'd definitely be looking to play it lower and shorting it on bounces like we're going to get here today.
Yeah, no edge when you're going up against the big boys. You mentioned Intel there, and kind of hit the street yesterday with some lower sales guidance. Hit the stock yesterday, being defended a little bit by Wall Street today. This stock has really had a haircut since being over $37, and this was back in mid-January. Any interest here in Intel?
Yeah, I mean, Intel had that big gap down in January, and it gapped down on Microsoft, basically talking about how the U.S. dollar was hurting the PC sales and whatnot. And we saw a lot of, over this last earnings report, we saw a lot of these large cap tech companies, Microsoft, Hewlett-Packard, Intel, have these just significant gaps that haven't really filled, that haven't had any good news to go off of. Intel a little bit bipolar, on what was it, Wednesday, the stock was up real big on a proposed deal with Apple, and then yesterday, as they lower their earnings guidance, gets hit. I'm never a big fan of buying a company right away after they lower their earnings guidance. I generally like to give it a week or two to let that stock stabilize. And so with Intel, that's the way I'd be looking at it. And if it starts trading back above 31.5 over the next several days, then there maybe I can get an entry using some of yesterday's price action as a stopping point. But that's what I'd be looking for there from Intel in that trade there.
Did you come in long any Alta calls here? ULTA stock beating the street here, trading up significantly. I mean, when I look at a chart like that, if I would have come in long, I'd be like hitting every bit in sight. Got up to 158 and change. Now we're coming back to the 154 level. Little volatility in this one.
Yeah, a lot of it. It's not one we will do for the challenge because of the option liquidity. With so many people on board, we tend to move those options a little bit, and they open up the spreads on them. But the numbers were pretty solid here this morning. I believe they were on CNBC a little bit here this morning talking about it. When chasing an earnings gap like this, the first thing I want to do is figure out, okay, what's my risk? And when you're dealing with a stock from 144 to 154, hard to manage that risk. So pre-market high here, 158.51. If I were going to jump in, I'd probably jump in on the downside, but use that 158.50 as a stopping point. But overall, I don't think you're going to get really good value out of the options in the first hour or two today. And so the way I look at it is let it tick around for an hour or two here this morning, let the option values come in, and then you're going to see a reaction high and a reaction low here this morning. Whatever stock may trade up to 158 down to 153. As the day progresses, it will break one of those levels, or it tends to break one of those levels. On a break of one of those levels, that's where I'd be looking either to go long or go short. And I'd probably have a little bit more bias on the upside just given some of the numbers they have.
Okay, we've been on the line with Jeff Yady. He is founder and lead trader of Trader Minute, giving us a little bit of a peek into his strategies in the options market. Sounds good to me, Jeff. Thanks for coming on. We'll speak to you again soon.
Well, thanks for having me, Joel.